If you'd like to see more of our videos, hit the subscribe button to stay on top of the market news. Good morning, traders. Welcome to today's market review. This is Fred Razak at CMtrading. Today's May 8th, 2020, and today is Friday morning. So looking at the highlights of the day, we're looking at the Dow Jones surging above 24,000 points on a high right before NFP. Now, NFP coming out later today, and looking at those numbers today, we have the non-farm payroll numbers coming out at 2:30 South African time later today. Now, everybody knows these numbers are going to be bad. The question is what direction we're going to go moving forward. I don't think anybody knows what direction. It looks like the markets want to go higher. However, I don't want to just celebrate that too soon. Now, looking also during the same time at 2:30 South African time out of Canada, we have unemployment change numbers coming out. Now, looking at the currencies, the euro bounces off support. As we spoke about it yesterday, about 40 pips off support. We'll take a look at that in just a second. Looking at the Dow Jones, it pushes higher. Some say because of China-U.S. trade relations, but it's pushing higher, okay, right before this number, which is a little bit ominous. Now, looking at the commodities, gold bounces while oil retraces a little bit, but looking to bounce this morning. And lastly, looking at the stocks, it's the FANG stock still continuing to go higher. Yesterday was Apple above $300 a share. That's a major threshold for Apple. But let's take a look at the markets and see what we can expect from today's trading. So we're going to first take a look here at a daily chart of the Euro USD, and you see this beautiful bounce yesterday. And we mentioned this yesterday, if it didn't break this 1782, 107.82, excuse me, it would bounce right off of it. And we're trading right now a 108.40, which is about a 50 pip move. Okay, so not such a bad move, you know, if you were able to catch this overnight. Now, taking a look at some of the other Forex symbols, GBP USD just bouncing over here at this area. Okay, really nothing to write home about. It is developing a little bit of a support level, you know, on this 102.98-ish level, but not breaking higher here. Okay, so with that said, I'd be focusing more on the Dow and the Dow components as well. Now, looking at gold, we had a nice little bounce yesterday. We're trading at 1718 right now. We're still within these ranges, okay? 1686 was the lower range. We mentioned this to pick it up on as it does bounce above it, and sure enough, that's exactly what happened. Now, jumping into oil, okay? We did sell off yesterday, and we did have that retracement at $25. We're trading just below it. Now, we're trying to bounce above it. Let's see if we do carry that later today. Now, obviously today, NFP coming out, 2:30 South African time, major number. Let's take a look at the Dow just to give us a perspective of where we can go. Now, the Dow Jones has been quite elusive. And the reason it's been quite elusive is that every time it gives a little bit of a trade, it gives it back up. Okay, and it gives it back up with more volume. Then it pushes higher on less volume, and then kind of consolidates, okay? And then surges higher, okay? And consolidates again. Now, we're trading at 24,140. We hit a high of 24,182. We're about 40 points below it. Now, this is all happening outside of trading market hours, meaning it's happening at off hours. It's not happening when the Dow Jones is actually trading. So this is why it's a little bit difficult to trade these markets, because you don't know what's real and you don't know what's not real. Okay, and going into this number, I think they want to shake everybody out. And whether you're long, whether you're short, they want to take everybody out just in terms of, you know, maybe propping up the numbers until things kind of settle down and the markets really get back to a swing of things. And by that time, we've called the bottom about 3 months from now. Okay, retrospectively. Okay, so with that said, be very cautious with this number coming out later today. Now, we are at a resistance-ish area because we did hit this 24,333, but if we do continue to break this higher on the upside, then they could squeeze us out, okay, which would be a short squeeze on the upside. It wouldn't be a real rally, so to speak, okay, because I don't think a lot of fund managers, a lot of money managers are keeping their cash on the side until things kind of settle down. No one wants to take extra amount of risk that they don't need to. Now, this is the story with the Dow Jones, okay, which represents mostly the old school kind of stocks. And if you heard me say this before, it represents the banks, it represents the oil companies, it represents healthcare, a lot of different sectors across the board. The NASDAQ, although, represents high-tech stocks. High-tech stocks like Apple, like Amazon, like Microsoft, like Facebook, like Google, these type of companies that are making the way, okay, for the US economy back right now. And we're trading at 92.23. Just a week ago, we were trading at 8,500. Okay, so within the last week, we've bounced 700 points on the NASDAQ. Now, we're only about 500 points from our all-time highs here from pre-corona, okay, which is a massive correction for the NASDAQ. Now, with this said, okay, if this does surge higher, now we are a little bit of a resistance-ish area at this 9,200-ish area, as you could see here. Okay, this may find itself correcting itself on the downside if we break it down. Okay, but just imagine, look at that. We're only about 500 points from our all-time highs. Okay, so we've made a big way and a big correction since our lows. Now looking at Apple, trading at $303. Again, on that resistance-ish area. Now this is across the board. As you could see here, we are at previous resistance, subsequent support. Okay, then we broke that support, and then what was support becomes resistance. And sure enough, we're there at that level right now. So this does have a lot to do with the components, okay? The stocks represent the components, and if we look at a few graphs, we'll see the same things. Amazon also. We're not breaking out higher at 2360, but we're not yet breaking lower. So I think they want to have some sort of confirmation from the numbers before in either direction that they go. Now jumping into Microsoft, we're only about 7-8 points away from our all-time highs. That's amazing. That's less than 3%. That's less than 5% on the Microsoft stock. So showing some tremendous strength, Microsoft, in the current environment that we're in. Now looking at Facebook, same story. We traded higher to $210. However, when we jump into JP Morgan, it's dead, okay? Which represents stocks that are listed on the Dow Jones. Okay, so there's a little bit of a rotation in the markets right now. The tech stocks are very strong, and that could change, okay, if these numbers come out negative and the market wants to sell off, okay? The markets could still sell off in these current levels. I mean, we are trading at 24,000, and we did hit a low of 18,200, so we still have, you know, some room on the downside if we don't see that the economy is going to be coming back, you know, within the next month. I'm not sure how much focus is going to be on this NFP because ultimately everybody knows that it's expecting it to be bad. I'm much more concerned about next month's NFP and to see how the bounce back is actually going to fruitate and how long it's going to take to bounce back. Okay, so that is what I suggest today. Play it safe. If you do try to take some trades, make sure that you cover yourself, you know, with stop losses, very, very, very conservative stop losses because it will be volatile. This is Fred Razak. I want to wish you guys a great trading day. Thank you.